Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Wednesday afternoon. Lovely to be here with you. I'm Nadine Blaney and I have a great special guest coming up. I'm going to keep you in suspense for now. Well, new year, same problems? I don't know. We'll get some analysis on it, but take a look at this local market. So it's not been a very good day, has it? We came out of the gates, well, the best we ever were. Look, picked up a little bit of steam heading toward the noon hour, but it's been sort of one-way traffic since then. So our market most certainly going its own way. We've got some heavy selling happening in the banks. We've got some heavy selling happening in the real estate trusts and the consumer staples and the gold miners and the insurers. Did I mention energy is also weaker on whole? So yeah, lots to chat about in just a moment. Look, it's a bit of a hangover, you could say. 2026, we saw modest gains for the S&P ASX 200. Nothing like was seen, obviously, with the NASDAQ. I had a couple of good conversations about the NASDAQ from a technical perspective. Tony Sycamore from IG, Chris Weston from Pepperstone. Tony Sycamore says that, look, he doesn't see why the NASDAQ can't take another leg higher in 2027, although it could trade a little bit sideways for now. But you can find both of those interviews on ausbiz.com.au if you're listening to us in podcast form after the fact. M&A, so we've got Coles making a move on Greencross, responding to media speculation. We'll get to that story in just a moment. And we also have Barrenjoey and Magellan completing their merger. Now, central banks catch up. Yeah, we've got that Sintra conference happening in Europe. It's the first time that we will be hearing from Fed Reserve Chair Warsh at such a conference. And look, I spoke with Scuddy from StoneX a little earlier this week, and he said that this, despite all the jobs data that we're expecting in the US, this was his key point, key thing to watch this week. Lots of speculation about what will he say. I mean, he's known for not wanting to say much. So yeah, it'll be an interesting read through coming tomorrow morning. But keep in mind, there's other comments coming from that forum, I suppose, as well. So what did the most damage to this market today? Look no further than Commonwealth Bank, which was down by 2.4%, $160.57. Interesting, because I had a guest earlier saying that we could see a change in the guard in 2027 from commodities to the financials. Not today. Let's take a look at consumer staples. So here's Woolworths down by close to 2% and Coles down by 4.5%. So not just that bid for Greencross, but also Coles had a application to build a store in Kalgoorlie. I think it was Kalgoorlie, yeah, knocked back by the ACCC because they said it would be uncompetitive. Metcash gaining, it's up by 1%, and Endeavour up by a pretty hefty 4.25%. I said BHP was higher, but Rio was lower by about 0.6%. South 32, some news out of it, and sending the shares higher by about 10%. So let's get to the news. It has agreed to sell its aluminium value chain assets to Alcoa in a deal worth up to $5.6 billion US. Coles, well, the AFR is reporting that the supermarket could acquire pet care Greencross for around $4 billion, and the ACCC blocking Coles' planned acquisition of a lease, yeah, I was right, of our new supermarket and liquor site in Kalgoorlie. All right, Ampol has completed its $1.1 billion acquisition of EG Australia. It says there are synergies to be had, but the share price still lower. Monadelphous is winning new construction and maintenance contracts worth more than $200 million. Boy, good at getting those contracts as of late. And Orica shares hitting a 3-month high, the company improving final investment decision to proceed with the Hunter Valley Hydrogen Hub. Okay, so let's get to that and what else is moving the markets with my guest here with me in studio, Kai Chen from MPC Markets. Lovely to see you. Thank you so much. CSL, I did not mention CSL, is up by 3%. I had a conversation with a guest earlier today, Chris Garpato. You can find that online. He reckons all the bad news is in the price.
Yeah, no, absolutely. We've seen actually a lot of the ASX healthcare stocks get battered throughout the year. So, we've got CSL, which is down by 30-some%. Cochlear, similar story, with downward revisions and guidance. Basically just in general the healthcare, and I think we're starting to see a bit of green shoots. So Telix, one of the smaller ones in the biotech space, we're actually seeing that bounce above, around the high 16s for now. So, that industry, I think, at the moment has been heavily battered, and you're really getting a bit of value in some of these stocks.
Yeah, okay, so CSL being the OG biotech in Australia, Telix being the up-and-comer biotech, so you've got a buy on Telix. I think I heard your colleague Jonathan Takadina today saying that he reckons it could still go higher from here.
Yeah, absolutely. So, it obviously went down with the whole sector, but they also had FDA issues, which has been resolved. So, now it's a question back into fundamentals and whether they can actually monetize their line, which they're doing. So I think it's actually fairly positive for Telix. And again, the news on CSL, I think a lot of the analysts, and us included, were quite dumbfounded by how much, to what extent the price has dropped. And I know, their vaccine segment of their business hasn't been performing very well, but the other segments have been still going fine. So, I think it's quite undervalued at the moment.
All right, so we will watch the healthcare space to start 2027. What do you make of that bank performance to date? Do you put that down to the house price headlines, I suppose, and reality? I mean, house prices are retreating from very high levels in most cases. So do you think that that's what we're seeing expressed in the banks?
I do. I think the big sentiment change in the macroeconomics of it, obviously the big budgetary changes have had a big effect on the banking and REITs sector. And also effect of the financial end of year, so people were selling all their losses before the financial year end. But I think it's a good time for a lot of investors to clean up their portfolio. Maybe they held the banks on for multiple years. And it's structural, there's structural change on the board. Their mortgage books aren't going to grow within the next year or so. It's pretty challenging in the real estate space at the moment. So I think the banks will be under effect for a while.
All right, let's go into the broader financials. Perpetual in a trading halt on a potential approach. It will resume, I believe, trade tomorrow morning. Another outstanding performer today, percentage-wise, was Magellan. So new year, new name, and this tie-up with Barrenjoey going through. So how do you look upon this one?
Yeah, no, I was really positive on this because I think Barrenjoey, they really built a really good name for themselves on the sell side. So a lot of the new transactions have been going through Barrenjoey. Magellan adds the buy side to it. So basically, as a fund manager and asset manager, those two have great synergies together, completing the set and being a big player in that institutional space. I think it's generally very positive, and Barrenjoey gets to list back in listing into Magellan. I think it's very positive for them.
Okay, broader picture though, we're talking about rate hikes in the U.S. Gold doesn't like that, silver doesn't like that, Bitcoin doesn't like that. So how do you view those sectors now? Yeah,
it's really interesting because I think before Kevin Welch came along, everyone was expecting him to be a dovish Fed chair member. And then, he came about and it was actually quite sensible. So, given the conditions that we are in, I know in Australia the inflation has been very high at above 4% most of the time. The US is experiencing a similar situation, but not as bad in the inflation terms. But it does cause the Fed to actually think about hiking rates. So they're priced in about 2 hikes later on in the year. For precious metals, that's not a very positive sign, as well as Bitcoin. That's really causing a bit of pressure on the downside.
Yeah, okay. So where do you see it ending?
Yeah, there's a bit of support level for the precious metal around the 4,000 for gold. We saw it try testing below that support level, but it's kind of bounced back. So I think at the moment it's a bit of wait and see how it actually develops. If they come out and the inflation continues to improve where it's lower than expected, I think we will see a bit of rebound out of precious metals. But again, it's really data dependent at the moment.
So we had you on Wealthy and Wise.
Yes.
This actually went to air today. You can catch it online, again, as per usual on Catch Up. It was a good conversation around US tech. So I started this piece by saying, the NASDAQ has just been, put South Korea aside, put Japan aside, but the NASDAQ has been something to behold in this first half of the financial year. Can it continue? What's your view?
Yeah, it's phenomenal. I think, going again into what's caused this, obviously the chip stocks have been the main contributor in the last couple of months to that spectacular growth. And it's supply side, it's led from supply side, right? So there's a constraint in terms of what they can produce in terms of the high bandwidth memory, so at TSM, as well as the producer's ability to do so. And I don't think that supply issue will resolve very quickly. I think there's at least 6 months to a year runway where you're still going to have that supply constraint. So, it can stay up here, but it's not, if the market falls, they're not immune. But I'll have to go to historical averages. The NASDAQ, if you look back on a 20-year track record or 40-year track record, the average is 16%. So it's pretty... The US has got a lot of tech stocks. It's built to grow. So
yeah, okay. So if you'd like more of Kai's and fantastic insights into US tech, into some of those big tech companies, you can catch up with Wealthy and Wise online. So US tech, are you at MPC finding more, I don't know about opportunities, if like more opportunities overseas than here in Australia?
Absolutely. I think obviously the material sector this year has made a bit of a recovery, like BHP and Rio. But again, it just doesn't have that growth factor like some of these technology stocks, especially with the whole AI thematic over the last 2-3 years. So you're naturally going to see overseas market which have exposure much more in tech outperform in the ASX. So yeah, there's definitely a lot more opportunities in the US and in Asia as well in some parts. Yeah, it's unfortunate we don't have better tech stocks. We have a couple that's good, but it's still quite limited.
But are your clients very open now to investing internationally?
Yeah, absolutely. So I think within our clients, probably 40% have some sort of international exposure. So they're all participating in the US as well.
Yeah. All right. Kai, it's always a pleasure. Thanks for coming in. Nice to see you.
Thank you.
And catch up with Kai and his views on Wealthy and Wise. Andrew Coleman from Team Invest on that as well. All right, that is a good wrap of what happened in markets today and a couple of stocks that Kai is keeping his eye on. We didn't chat about South 32, but that's okay because we caught up with his friend and colleague, Jonathan Takadina from MPC Markets and Henry Jennings from Markets Today.
I find it remarkably ironic in terms of this deal, I have to say. South 32 used to be part of BHP. BHP jettisoned it because it was base metals and aluminium, etc., and set it free, debt-free as well. Here we have a pretty good deal for South 32. Certainly the market likes it. It's up nearly 9%. But I find it quite ironic that South 32 is pivoting towards more exposure to copper.
So usually when we have these big M&A deals or sell-offs, there's usually a clear winner in this case. But when I looked at the deal, it looked actually like a fairly priced deal. It's not like South 32 where letting these things go for a bargain basement prices or a fire sale in that regard. But it doesn't look like Alcoa were paying up too much as well. Obviously they're offering scrip as well, which is always a little bit easier to get rid of than cash in that case. But overall, South 32, the focus is on copper.
So on a pretty dismal day for this local market, let's check in to see what led the market in terms of percentage. So that was Perpetual, 16% higher. Magellan up by 11%, soon to be known as Barrenjoey. South 32, which we just heard about, up by 10.25% to $4.31. Let's now flip the script and take a look at 4D Medical. So that high flyer coming back down about 10% down to earth. $4.08, had some news out earlier in the week. Alcoa picking up those South 32 aluminium value-add assets down by 7%. Sims Metal and Greatland Gold miners not doing well today at all. Small to mid-cap space, and we've got Emero up by close to 18%. And Talga, Boss Energy as well, up by 15%. Interesting, we saw a note on the uranium miners come through from RBC Capital today. Also, taking a look at those that did lag the market. And look, not a lot to say about any of these. Kelvo Rewards, a 7-cent share, down by close to 10%. So tonight, we get the EU inflation estimate. We also get the ADP non-farm employment change. So that's the private market read that precedes the jobs data, the non-farm payroll data that we get out tomorrow. Don't forget that a lot of this data has been brought forward a day because we have the US Independence Day, July 4th on Friday. So markets will be closed. By the way, it's Canada Day. Happy Canada Day. And tonight, that ECB forum on central banking does continue. It's called Sintra, and you'll be hearing from the central bank chair from Canada. So he'll be wearing his red and white, no doubt. The EU, the UK, and Warsh, Fed Chair Warsh. Some say it's the global central bank of the world. He's speaking, so we'll have that to bring to you tomorrow morning. Tomorrow morning as well, we'll get the goods trade balance for the month of May. We're expecting to see the surplus increase. All right, so here is a snapshot of the local market. Look, it wasn't a great day, was it? We saw the market down by about 7 tenths, close to 0.8%. 7 of the 11 sectors lower. Healthcare was the best performing sector. Thank you very much, CSL. It's up 4% over the past 5 days, which is, I suppose, why we're starting to see a bit of commentary on the channel about a change in tide potentially coming for the healthcare sector here in Australia. Of course, as always, you can catch up with anything you may have missed online, ausbiz.com.au. Plenty of fantastic interviews from throughout the day covering asset allocation, investment strategy, stock specifics, and we take you to the advisory with a look-see into financial planning, SMSFs, and superannuation and retirement strategy as well. Why would you go anywhere else? Hope you have a good night. See you tomorrow.